Good afternoon, everyone. This is Chuck Self, Chief Investment Officer for iSectors. I'd like to thank you for joining us today to review the iSectors second quarter 2016 performance updates. I will be providing a brief second quarter performance overview of all the iSectors models and conclude with a research brief on the markets. This call shall last about 10 minutes, with a question and answer to follow. Please feel free to ask questions anytime during or after the presentation by clicking on the chat box in the lower right-hand corner of your screen. This presentation will be recorded, and a copy will be available on our website tomorrow at www.isectors.com. Just click on the iSectors blog icon, and it will take you to a link to access the recording. We will also be sending a link to access a recorded copy of this presentation to all webinar attendees immediately after the call. The post-MPT allocations outperformed their benchmarks in the quarter. Both post-MPT allocations were led by Treasury bond holdings, and post-MPT growth was helped by gold stock securities. Both strategies were hurt by technology stock allocations. As the chart on slide 3 indicates, post-MPT growth continues to shift its allocation towards safe haven assets. The model continues to significantly de-emphasize stocks. Within the safe havens, the model has increased energy, real estate, and gold stock positions while slightly reducing bonds. Even with these changes, Treasury bonds is still currently the most attractive asset class. The iSectors post-MPT allocations continue to outpace other ETF strategies. We are pleased that growth is ranked 3rd and moderate is 11th among 507 ETF strategies. Thus, they're both in the top 2% for 5-year performance in the Morningstar ETF Managed Portfolio database. We expect post-MPT growth and moderate to continue their reputations as premier allocation strategies utilized by investment advisors. A number of allocations continue to be helped by rising commodity prices. Endowment outpaced its balanced benchmark, while liquid alternatives outperformed hedge funds. Investors continue to support the commodity markets since they have cheap assets uncorrelated with the volatile stock market. As the chart on slide 4 shows in black, precious metal stocks were in demand throughout the quarter. The chart also plots in red the negative price trend of one of our market neutral funds. Merger arbitrage holdings also hurt results as corporate actions have waned this year. Both allocations are broadly diversified and continue to take advantage of the bullish commodity markets. Also, it should be noted that the liquid alternatives allocation has outperformed hedge funds over the past 5 years. Given the advantages of the allocation, including daily liquidity, complete transparency, availability to all clients, not just accredited ones, and a current yield of 2.8%, liquid alternatives should be considered for diversification in case equity returns ease. Domestic equities again outperformed global equities, and they both bested the Standard & Poor's 500. Both allocations benefited from an emphasis in dividend stocks, which continue to outperform growth stocks. The global fixed income allocation was negatively impacted by the dollar strengths, affecting the non-dollar weightings in the quarter. The allocation benefited from mortgage and high yield holdings. The iSectors domestic equity allocation has earned very attractive returns over the past 5 years compared to most large cap core strategies. In fact, the domestic equity allocation is ranked 6th out of all 507 ETF strategies in the Morningstar database for 5 years performance. Again, iSectors is proud to be the only investment manager to have 3 strategies post-MPT growth, post-MPT moderate, and domestic equity in the top 11 of all ETF strategies over the past 5 years. The commodity rebound positively affected our inflation protection and precious metals allocations in meaningful ways. Inflation protection up over 8% in a quarter, and precious metals up over 11%, rose with increasing gold prices. As you can see in this chart on slide 6 for the Rogers Commodity Exchange Traded Note, which tracks a very diversified portfolio of commodities, the commodity sectors also contributed to strong positive returns for inflation protection. Timber and international real estate holdings negatively affected the inflation protection allocation. We continue to believe that a 10% to 20% allocation to precious metals, inflation protection, and or liquid alternatives will be worthwhile given our view that the next 5 years in the equity market will not be as profitable as the last 5 years. As the chart on slide 7 indicates, capital preservation has earned over 2.1% on an annualized basis over the past 5 years. The yield is attractive with a short duration while maintaining investment grade quality on average. Capital preservation rose during the quarter due to short mortgages and high yield holdings. Finally, the tactical global balance allocation outperformed its 60% stocks, 40% bond benchmark in the second quarter. As represented by the chart on slide 8 depicting the price movement of the Vanguard REIT ETF, the strategy's real asset holdings boosted returns. The international holdings were hurt by the strong dollar. It continues to be fully invested in all major domestic and emerging market asset classes. We at iSectors, like you, have been inundated with ETF offerings that supposedly offer a better way to invest in the complete market or sectors using a structure that differs from the traditional capitalization-weighted index. These so-called smart beta strategies have seen significant asset inflows as investors are looking for systematic methods to beat the market. When iSectors evaluates these strategies, one of the main measures we utilize is downside protection in corrections and bear markets. As you know, the point of maximum risk in a client relationship is when they are losing money, at least on paper. We attempt to create strategies and hold securities that protect against large losses. The graph on chart 9 depicts the relative return of the trailing 2-year Wilshire 5000 index on capitalization and equal weighted bases. The Wilshire 5000 captures the price movements of virtually every stock listed on American markets. If a point is above the graph, above 0 in the graph, for instance, in 2004, then equal weighted has outperformed cap weighted over the previous 2 years. If a point on the graph is below 0, for instance, in recent months, cap weighted has outperformed. Equal-weighted ETFs are highly correlated to many other smart beta ETFs, such as those utilizing quality and momentum. Unfortunately, equal-weighted indices have underperformed when they are most needed. In down markets such as 2007 and 8, in 2011, and in the recent downturn. Although equal-weighted indices have outperformed over time, they incur greater than market losses in downturns. It is for this reason iSectors continues to skew the use of most smart beta ETFs. The only exception is dividend funds, given its long-term track record of providing protection in market downturns, including the most recent one. As you carefully inspect the disclosure page, we will now begin the Q&A portion of the webinar. If you have any questions, please type them into the chat box in the lower right-hand corner of the screen. The first question is, are you having trouble reading the script, or is this a computer? And I think I have something going in my head, so I am having trouble reading the script, but hopefully you can, if you have any problems, you will be able to see the replay on YouTube based on the link from our site. The next question is, does post-MPT own short-term or long-term bonds? Well, in order to get the diversification that is necessary by having fixed income instruments in post-MPT, we own longer-term treasuries. The longer-term treasuries is the greatest deflation defense that you have, and it's more uncorrelated to the equity and real asset sectors that are in the strategies. So that's the reason why we own long-term treasuries in the post-MPT strategies. We have a questionnaire that asks, where can I find these portfolios and what does it cost to own them, and do we manage them? This is a first-time participant, so thank you very much for joining us. We are on many different platforms, and both brokerage platforms and third-party platforms, and so we're widely available. And the cost of the strategies depends on the strategies that we're talking about. And what we do is we manage all 14 of these allocations, and we buy ETFs or mutual funds, mainly ETFs, in order to create these allocations, and then we distribute them on these platforms. What I'd suggest to do is to call Scott Jones or me, and our contact information is on the next slide, and we'd be happy to figure out what would be the best way for you to access these strategies. Seeing that there's no other questions, I want to conclude by thanking everyone for attending our webinar this afternoon. If there's anything that we can do to assist you with your wealth management or 401k asset allocation needs, please let us know. We could be reached directly at 800-869-5184. Again, thank you, and hope you all have a wonderful rest of the summer.